addressing ISSB's IFRS S1 and S2, an increasingly important topic in our current business landscape. My name is Numair Mushtaq, and I am a chartered accountant by profession and co-founder of OASIS Consulting Group. OASIS is a boutique consulting firm based in Texas, USA, specializing in risk analytics, finance transformation, transaction advisory, and ESG services. The firm caters to clients across North America, Europe, ASEAN, with a particular emphasis on the Middle East. As we all know, the global business environment is undergoing a profound transformation. Investors, consumers, and stakeholders are no longer satisfied with just financial performance. They demand transparency and accountability in how companies manage their ESG responsibilities. ESG reporting is not just a trend, it is becoming a fundamental aspect of corporate strategy and decision making. Today's session is designed to offer valuable insights into the newly introduced IFRS sustainability standards, addressing challenges and outlining future trends. Now let's get started. Our first speaker is Bella Cheng, a fellow at International Sustainability Standards Board, ISSB. Bella transitioned to ISSB as a secondee from PwC a year ago, contributing to the ISSB's capacity building program. Prior to this role, she was serving as senior manager at PwC, focusing on research in sustainability reporting standards. Bella, the floor is yours.
Thank you. Glad to see you all. So please wait a moment. Okay. Okay, just check everyone can see my shared slides. Okay. So glad to meet you all here. You should have noticed that the development of sustainability disclosure has been very rapid in recent years. So last year, the ISSB published the first two sets of sustainability disclosure standards, and many jurisdictions have already indicated their interest in moving towards adoption. So today, I'm going to talk about the ISSB and its recent development and the priorities going forward, and a very high-level introduction of the standards, IFRS S1 and S2. First, let's look at what is ISSB and the updates. I'd like to show you the structure of the IFRS Foundation. As you can see on this slide, the IFRS Foundation has a three-tier governance model. Capital market authorities responsible for corporate reporting in their jurisdictions sit on the monitoring board and are responsible for overall governance and the oversight of the activities of the IFRS Foundation. Trustees are responsible for strategy and oversight of the standards setting bodies. The IASB, the accounting board, was founded in 2001, and the ISSB, the sustainability board, was founded in 2021 at COP26 in Glasgow. The boards are independent and complementary to provide comprehensive information to investors and other providers of capital. They work in the public interest, with both boards overseen by the IFRS Foundation trustees. In addition to the IFRS Advisory Council that provides strategic advice to trustees, IASB and the ISSB, there are a few other groups that advertise the ISSB. For example, a jurisdictional working group, which enables dialogue to enhance compatibility between the ISSB's global baseline and the jurisdictional initiatives. And there's also another group named Technical Reference Group. This group provides technical advice and support to ISSB members and the technical staff. Besides, I'd like to highlight the Transition Implementation Group, which is short for TIG. The TIG consists of 17 members. Among them, 13 are preparers and 4 are assurance providers. Also, there are 3 official observers. The TIG discusses in a public forum implementation questions that arise when companies implement IFRS S1 and IFRS S2. During the meeting, the TIG members share their views on the issues. But please note that the TIG doesn't issue any authoritative guidance. The ISSB encourages the stakeholders to submit potential implementation questions for consideration of discussion by the TIG on IFRS S1 and S2 as soon as possible. Now here comes why ISSB established. While sustainability reporting has been around for a while, there were specific circumstances that lead to the demand for the ISSB. Investors need decision-useful, consistent, comparable information. Sorry. Oh, I think you need back to the host. To me, okay. Okay. So let's continue. Investors need a decision-useful, consistent, comparable information that enables them to understand sustainability-related risks and opportunities. Information has been provided, but not in a consistent manner, and it has designed to meet different audiences. There has been confusion around the myriad of standards and frameworks, with companies and investors seeking clarity and guidance. This confusion adds costs and the complexity for companies and for the capital markets, which rely on robust information to function efficiently. So by consolidating the resources of other investor-focused initiatives, which is SASB, IARC, CBSB, and TCFD, the ISSB has been able to address fragmentation and align international support for global baseline of sustainability disclosures, such as G7, G20, and the Financial Stability Board. Furthermore, the ISSB has a transparent, rigorous due process to develop market-informed standards that respond to these needs. Okay. So the ISSB is focused on developing standards that can provide a common language for sustainability information to enable comparable and consistent sustainability disclosures across global capital markets. The ISSB works with jurisdictions around the world as well as stakeholders to deliver this. Through this global shared endeavor, ISSB standards can provide a foundation for globally applicable disclosure requirements, thereby establishing a consistent and a comprehensive global baseline. This includes working closely with the International Organization of Securities Commissions, which is IOSCO, which has endorsed the ISSB standards. The ISSB's global baseline has been developed to provide information that is material to investors globally. Sorry, a moment. Okay. Jurisdictions are then able to require local market participants to disclose further information by adding their own additional building blocks to these global foundations, tailored to the incremental information needs that jurisdiction considers necessary. Additional disclosures can be required as long as that information is presented in a way that doesn't obscure the global baseline. Taking this building block approach provides an efficient reporting system for the benefit of companies. So the ISSB's role is to provide a comprehensive global baseline of sustainability-related disclosures through standards. In July 2023, the International Organization of Securities Commissions, which is IOSCO, announced its endorsement of ISSB standards. IOSCO asked their 130 members to consider how they can incorporate the ISSB standards into their regulatory frameworks. Their endorsement is very important for the adoption of the standards around the world. Next, there are the audit standard setters, such as the International Auditing and Assurance Standards Board, short for IASB, which is in the process of setting sustainability-related assurance standards to help drive confidence and trust in disclosures. And then you have the jurisdictions that will require the standards, and those companies that will opt to apply them voluntarily because of the perceived benefits. The foundation continues to engage with other stakeholders on adoption and the related issues. The foundation is also taking to stakeholders around the world who are planning to support voluntarily disclosure against the new standards from 2024. This slide shows a summary of ISSB milestones. Some of them were covered earlier. Now I'd like to highlight a few items. The first one, as you know, the IFRS S1 and S2 were issued last year, June 26th of 2023. Just 1 month after standards were published, IOSCO endorsed the standards, which presents a significant step towards the global baseline. Because the endorsement echoes IOSCO's endorsement of the IFRS accounting standards over 20 years ago, which helped underpin widespread comprehensive adoption of IFRS accounting standards, enabling them to become the truly global language of accounting. The second item I'd like to highlight is there was another milestone at the same month, which is the Financial Stability Board, the FSB, has asked the IFRS Foundation to take over the monitoring of the progress on companies' climate-related disclosures from the Task Force on Climate-Related Financial Disclosures, the TCFD. The FSB noted that the standards mark the culmination of the work of the TCFD, which was established in 2017 at the request of the FSB. But this doesn't mean TCFD recommendations disappeared. Companies and jurisdictions still able to use TCFD recommendations. The last but not the least, the ISSB is also working on interoperability between ISSB standards and the other requirements. One of the interoperability examples is the high degree of alignment in climate-related disclosures between ISSB and the ESRS, the European requirements. And the ESRS ISSB standards interoperability guidance was published, which provides practical support that explains how companies can efficiently comply with both sets of the standards. After introducing the history of the ISSB, I'm going to talk about the priorities going forward. The ISSB assess the resources we have currently and the importance of different activities. We decided during the January board meeting of 2024 that we should put highest level of focus on supporting implementation of IFRS S1 and IFRS S2. Next, equal focus on enhancing SASB standards and beginning new research and standard setting projects. some capacity reserved for flexibility to address emerging issues and engage with IASB as needed. Furthermore, 3 activities fundamental to all work. They are interoperability with other standard setting initiatives, connectivity with IASB, and stakeholder engagement. As for the work plan, the ISSB has finalized the decisions for its next 2-year work plan and will start 2 new research projects. The first one is biodiversity, ecosystems, and ecosystem services. This is because there is growing interest among investors for improved disclosures. And this project will build from pre-existing initiatives such as SASB standards, CDSB guidance, and TNFD. The second one is human capital, which affects companies of all sizes and types, and also an opportunity to address a lack of consistent, comparable disclosures. In terms of implementation of IFRS S1 and S2, we have heard through our consultation on future priorities and through stakeholder engagement that the market needs support adopting and implementing IFRS S1 and IFRS S2. This will be a key focus for the ISSB throughout 2024. The ISSB is developing educational materials and providing support to help build understanding of the standards, including through the IFRS credential. Key activities to support implementation are, for example, build out our capacity building program and provide new resources through the Knowledge Hub. Continue to develop educational materials on key aspects of IFRS S1 and S2, and also the IFRS credential, support interoperability with jurisdictional and voluntary initiatives. Finally, I'm going to give you an overview of the adoption status. So the IFRS Foundation was asked by investors, companies, regulators, and policymakers to establish the ISSB so that capital markets had access to high quality, consistent, and comparable sustainability-related financial disclosures. To achieve this, the IFRS Foundation works closely with jurisdictions to support their journeys to adopt or otherwise use the ISSB standards internationally, taking into account jurisdictional considerations. We are excited by the significant significant interest in the ISSB standards of jurisdictions around the world. We are grateful to IOSCO for their ongoing leadership. Already around 20 jurisdictions globally are considering plans to adopt or otherwise use ISSB standards in their regulatory frameworks. Jurisdictions including Brazil, Costa Rica, Sri Lanka, and Turkey have already announced decisions to adopt or otherwise use the ISSB standards. You can also find a list of ongoing and completed jurisdiction consultations on sustainability-related disclosures on the IFRS website. So now I'm going to give you a very high-level introduction of these 2 standards. So this slide sets out key concepts in IFRS S1, our overarching and foundational standard. So the full name of IFRS S1 is General Requirements for Disclosure of Sustainability-Related Financial Information. IFRS S1 sets out the overarching requirement for a company to disclose information about its sustainability-related risks and opportunities that is useful to investors in making decisions relating to providing resources to the company. to make sure it is connected and can be considered alongside financial statements. The information is disclosed as part of a company's general purpose financial reports. IFRS S1 also sets out general requirements for the content and the presentation of information, including the core content for a complete set of sustainability-related financial disclosures, establishing a comprehensive baseline of sustainability-related financial information to meet the needs of global capital markets. And also the standard applies the TCFD architecture whenever providing information about sustainability, a structure already used by the many companies around the world that use the TCFD recommendations. IFRS S1 also requires industry-specific disclosures so that companies can focus on reporting that better describes their business. For matters other than climate, IFRS S1 refers to sources to help companies identify sustainability-related risks and opportunities and the information, for example, the ISSB standards. Finally, it can be used in conjunction with any accounting requirements. So as you can see, the IFRS S2, the full name is climate-related disclosures. So IFRS S2 fully incorporates the recommendations of the TCFD, which is the Task Force on Climate-Related Financial Disclosures. IFRS S2 climate-related disclosures sets out the requirements for a company to disclose information about its climate-related risks and opportunities, building on the requirements described in IFRS S1. It requires the disclosure of both cross-industry and industry-specific information about climate-related risks and opportunities. Climate-related risks include both physical risks, such as those resulting from increased severity of extreme weather, and transition risks, such as those associated with policy action and changes in technology that can affect how a company can run its business. Climate-related opportunities refers to the potential positive effects arising from climate change for a company. Well, it's important to note that IFRS S2 needs to be applied with IFRS S1. This is because IFRS S1 sets out the way companies should approach reporting. For example, IFRS S1 established the key concepts, such as the need for connected information, how to think about the value chain. And also IFRS S1 provides important guidance on the assessment of materiality to be used when applying S2, which determines which particular disclosures a company needs to apply given its own circumstances. Also, IFRS S1 sets out the qualitative characteristics of the information that has to be provided. For example, that information needs to be relevant and representationally faithful. IFRS S1 also sets out the requirements about the reporting that has to be provided, such as the reporting needs to be provided at the same time as the financial statements, and the reporting needs to be provided in the general purpose financial report with the financial statements. IFRS S1 also explains how to deal with things like changes in estimates and errors, but provides relief from providing commercially sensitive information about opportunities and when to disaggregate or aggregate information. So for any of those aspects of reporting about climate, an entity needs to use IFRS S1. So that's all for me. I think you will know more about details about the requirements of IFRS S1 and S2 very soon. So I am going to hand over back to Numair.
Thank you, Bella, for giving us insights into the IFRS S1, S2, why these standards are established and how ISSB is working and what is coming next. Thanks for the valuable time. Next, I would like to call my colleague Hira Roohani. Hira is ESG partner at OASIS. Hira Roohani is recognized as a strategically minded and highly adaptive professional excelling in sustainability advisory and ESG reporting. Our expertise extend to aligning business practices with the latest environmental, social, and governance criteria, ensuring compliance with international standards like IFRS S1, S2, GRI, and TCFD standards. She has experience of steering corporate strategy towards sustainability across various organizations in Europe and Middle East. Over to you, Hira. Thank you.
Thank you, Numair. Thank you very much. So good afternoon, everyone. Thank you for joining for this topic, because this is definitely something very interesting and all of us need to know more about this, the technical aspects and everything. So Bella has explained everything in detail, and now I'll be focusing on the factual and the technical side of the IFRS 1 and IFRS 2, that how these two are useful and how one can understand the requirements and what are the things they should be ready for the implementation process. So let me share my screen and let's get started. Please let me know if all of you can see my screen.
Yes, we can see your screen. It's visible.
Okay. Okay, thank you. So, as Bella has already explained quite a few very good and necessary information that is required to back your concepts for requirements of IFRS 1 and 2, that how that came into existence and what are the reasons, what are the organizations behind it. So I'll be focusing on the basic understanding of this, what is ESG, because ESG is the umbrella which requires a lot of different standards. We have been saying from last few years that there are a lot of regulations, a lot of initiatives, a lot of things to sign up for and do reporting on this domain of ESG. And why only the word of ESG, environmental, social, and governance? Let me just put some light on this one. The things we are focusing. Let me check the chat first. There are a few. Okay, thank you. Thank you for telling. So, ESG covers the whole operational side of any organization, any company. Like they are impacting the environment, how they're impacting the environment, how they are connecting with their people, how they are impacting their people, and then governance, how they are operating, all the policies, procedure that should be in place to run an organization in some smooth direction, in some right direction. So that's why these pillars are very important. And if any organization that is focusing to grow and that wants a better reputation in the market, they can use these pillars and they can integrate these pillars into their strategies, into their business model. They can develop their own strategy. They can develop their own sustainable business model by mixing these, by integrating these ESG pillars into their existing business model. So what are the benefits they are going to get? They will be able to mitigate all the risks. They will enhance their resilience. Companies which are focusing on these side, they are always preferred by these companies, are always preferred by their stakeholders, their investors, and they are able to tell their performance, their financial performance, and their sustainability ESG pillar based performance. So that is the need of the ESG. And as Bella has already told, there were a lot of standards and a lot of regulations, initiatives to work on, and all the companies were just confused. So where we are supposed to report on, some investors are requiring to report on some other platform, and others are requiring to report on other platforms. So IFRS 1 and 2 is here to consolidate that those requirements for all for once. So they are covering a lot of the most famous standards, the most trustable, reliable standards company used to report on the request of investors. So later we will discuss that as well. Let's move to next slide. So yes, ISSB is built on investor-focused standards. As I have been already telling in the previous slide, it is for the investor. It is from that perspective. That's why we are relating all of these information related to sustainability performance of ESG performance of some organization with their financial performance. So they have consolidated the IFRS Foundation, which is integrated reporting, ISSB standards, climate disclosure standard board, and TCFD into IFRS sustainability. And that's how it is like above everything. It is the requirement. If you are like IFRS 1 and IFRS 2, there are two standards. One is focusing on the general requirement of all the disclosures, sustainability related disclosures, and one is focusing on the climate related disclosures. So when a company is reporting on IFRS sustainability disclosures, they are complying with a lot of other standards as well. That's why it's here to clear all the confusion regarding to where to report, how to report, and how many matrices and performance targets they have to evaluate and report on. Then again, as I've told you, IFRS 1, it deals with journal disclosures, journal requirement for sustainability related disclosures and financial information. So as you know, when there is sustainability, it's been now more than a decade that sustainability is here. And we have seen companies growing because of sustainability, because of their focus on ESG things. Though they comment they are continuously improving, but still they are prioritized by the investors because of this one commitment. They are focusing on the ESG agenda. The second disclosure is more about the climate related disclosures, because climate assessment, climate gap, risk and mitigation is one of the threats and opportunities thing for most of the companies. They can turn them into opportunities if they are working in the right direction. They are working to get data to show how they can make the risk into opportunities. So these are two biggest pillars which are covered by IFRS 1, all the sustainability related disclosures and all the climate related disclosures in two of these standards, IFRS 1 and IFRS 2 respectively. We are going to dive deep into these key concepts of IFRS 1 and 2. Before going to 2, we will be discussing one, all the key concept, how to report in that, what kind of the information they need to include, and what are the connected other information, what is the most important concept and why they are here. So it is all about, when you are working on IFRS 1 requirements for the disclosure, it is all about identifying your risk and opportunities related to sustainability related disclosures. And now for the sustainability, where you have to do your materiality. The materiality in this concept is single materiality. It's not the double materiality thing. So that is one part. Single materiality, you have to assess your materiality, then you have to identify your risk and opportunities, and you have to provide your disclosures for all those risk and opportunities. The best part is the people who already know about TCFD, they know there is a 4-pillar core content approach, that is governance, strategy, risk management, matrices, and targets. So you have to report on those 4 pillars in this, because this is adopting TCFD as well. And that's the best part, because this is one of the good approach that was already there. So IFRS 1 adopts that, and it is very clear that how they have to report. There are very clear pillars. They have to give their performance based on matrices, and they have to manage their risk and give information about their strategy and governance. That covers the entire concept of how they are going to identify risk and opportunity, how they are going to develop their strategy and governance procedures. Then they have to manage their risk. And after managing their risk, after implementing that strategy, they have to measure their performance against some matrices. So that is something. So that is something they have to cover in all the IFRS 1. And then we will be discussing more about the connected information. These are the things we will discuss in detail now, one by one, that how they are supposed to identify risk and opportunities, why it's important. So yes, again, I'll give more information about that in IFRS 1. We have been talking about risk and opportunity. In IFRS 1, we will be focusing on risk and opportunities. The risk and opportunities are very important because these can differ from business to business, location to location, and type of product they're selling. Some risk for other company could be opportunities for some other sector and some other company based in different regions. So you have to, when you are doing that analysis, the assessment of your risk and opportunity, you have to cover all of these things into your condition and many more criteria and factors to see what are your actual risk and opportunities and how you can mitigate that, how you can develop your strategy to help set your company's direction in right way. So the FRS 1 to S2, that focuses more on the climate related risk and opportunity. That would be because of some natural disasters. Maybe there is some change in the rainfall pattern, and you have to identify which could become your opportunity and what are the risks associated with that. But the best thing is this whole standards works with SASB standards, because there is one para that is 55A that considered for the applicability, for the entire entity, you have to see for the standards of SASB standards, see if they are applicable, and if you are required to report on that part, you can definitely focus on these standards and use these standards to give your disclosures, any industry-based disclosure or anything. So you are good to go with these standards when you are reporting on IFRS 1 and IFRS 2. Again, there is one thing that entity has to identify. Risk and opportunities are very important in this whole concept of IFRS and IFRS 2. And if you know about more TCFD concept, there were mention of risk and opportunities. And the concept, now when I say they have adopted the TCFD, it is very clear from that concept, they are always talking about risk and opportunities. And once, like, this is the assessment of risk and opportunities, the first step. First, you have to see what kind of risk and opportunities are there. Then you have to identify what are the most relevant ones. After that, you have to disclose your information according to that. And if there is no standard to provide you guidance that how to disclose, then you have to do your judgment, and according to that, you have to disclose your information. There is, as I told you earlier, there are four core pillars. That is governance. You have to develop the processes, controls, procedure company uses to monitor and manage overseas sustainability related risk and opportunity. The second thing is about strategy. Is it about how you are planning to strategize everything, risk and opportunities. Then is risk management, which is more about excuse me. Which is more about assessing and prioritizing and monitoring sustainability related risk and opportunity. Just give me a minute. So thank you for waiting. Matrices and target. When you have identified your risk opportunities, I believe I need to take some water. I am having some issue in my throat. Just give me a few seconds and I'll be back. So matrices are very important. Like internally, you have to develop your matrices. And how you can develop, you have to identify which part is more critical, which according to your materiality, which is the most important pillar for your stakeholders. And once you have worked on that part, you have developed your internal matrices, it is quite fine. You are able to, because matrices are developed in such a way that you have some indicator to measure your performance. You can measure your performance, you can measure how you are performing against those matrices and in which direction you are heading. Are you able to make your risk into opportunities? Are you able to take advantage of your existing opportunities? So these are very important things. And I totally believe that developing some good risk and developing some good matrices is one important key where I have seen companies lacking. They have some strategy, they have good governance processes, they have the entire department of risk management. But when I see the relevant matrices are not very relevant, they are just generic matrices. So this is one very important key point here to, if you want to see if you are progressive in some real way and you have some real direction set for your all the matrices and your performance. So there is some connected information that is very, very important for when you are reporting on this, because there tells these disclosures are supposed to be on the same on the same time period as you are disclosing your financial information. So it's not something like some other standard, some other initiative you have to sign up for sustainability, but it is more about your financial disclosures. You have to, that reporting period needs to be same, and you have to submit these along with your financial statement. So it is a very important kind of compliance that you have to follow, but it covers a lot of the information. If companies are very clearly reporting on IFRS 1 and IFRS 2 and submitting that with their financial disclosures, they are able to use that information at multiple different platforms. They have signed up for ESG or sustainability purposes, because the information, all of us know, it is almost 80 to 85% always the similar. But IFRS is one step ahead because it has just compiled everything together, and it is then being audited, and you get what you know, it is publicly available, and it's very clear. The transparency, the accountability, these standard sets is very important. That's why people and companies who are focusing on the ESG and who are not focusing on the ESG, they are now supposed to see what they are planning to do, because this is something they have to do as soon as they are now preparing their financial disclosures. IFRS 2, there are now, we will be now discussing everything, but that is related to climate related risk and opportunities. There are industry specific matrices which are built by ISSB. These are the ones which help you identify your risk and opportunities related to climate related disclosures. So again, we will be talking about the climate related physical and transition risk, because risks are very important. Then we will talk about opportunities. And there is, after opportunities, when you have identified, why is the need that we have to develop that strategy? Why is the need that we have to look for risk management? That because of we want our organization to be resilient for all the possible situations. So that is something very important. But this, as we are talking about climate related disclosure, this is very important for GHG. That is greenhouse gases. And for that, the key document is GHG protocol. And according to that document, companies now need to develop their inventories, scope 1, scope 2, scope 3, give their classification, and what an account for their absolute gross of scope 1, scope 2, and scope 3 they have to provide in this disclosure. And now that is something like companies were not of the point that they have to go for some carbon footprinting or GHG emission document, but now they are supposed to go for that. Again, in this document, we have 4-pillar approach, that is governance, strategy, risk management, matrices. But now this will be focusing more on the climate related one. Let's discuss one example. If some company X has identified their emissions for scope 3 are 1,000 CO2 equivalent, then how they are tons of CO2 equivalent, and how they are in comparison to their competitors, how they're performing, what are the things they can do to reduce that amount. Because I've just assumed some numbers, so there could be changes like technological changes, or maybe just improving the efficiency of existing processes. And the second thing is, it is more about how you plan to integrate all of that in your system. And it is, I am of the point, like companies think there is a lot of initial investment that is required to get started with ESG and to reduce their carbon emission. And companies normally prefer buying some carbon credits and things to reduce the GHG emission. But if, as I've given you one example, there are technological changes, there are procedures which you can use to make your process or operations efficient, to reduce GHG emission, you can switch to some other type of fuel, and there are a lot of things you can do. But ultimately, if you look at the bigger picture, maybe 10 years or 20 years later, you will be more advanced, which is the requirement to stay in the market. As we know, if I talk about the Facebook, that was like, if I go back 40 years, there was no Facebook. They are improving, and now they have more competitors as well. There are a lot of different things as well, like LinkedIn is there now, Instagram is there, TikTok is there. So one of the platform released Reels, all of other also released that kind of specific feature just to stay competitive. But if someone is skipping even the YouTube, if the YouTube have never planned to include that feature, they were like falling behind. So this is one very common example. All of us know that advancement is very necessary if you want to stay in the market. And it is very important for the companies. So sustainability and ESG actually keeps you on the track of advancement. It keeps you prioritized in eyes of your investors, in the eyes of your stakeholders, and in your market. You have good reputation. You are already, it keeps you prepared for the coming times. IFRS 2 also set out for pillar content approach. You know, we have already discussed, but it is more about now the climate related disclosures. We will have some specific strategy for climate related things, all about your GHG emission and how you impact the climate, what are the climatic risk and opportunities, and what is your plan to manage those, and then your internal matrices and target. Like in this journal term, you can have few matrices for waste, for water, for chemicals. In most of these, you must have few in climate related ones, you must have few matrices related to GHG, scope 1, scope 2, for all of the separate categories of scope 3 maybe. And then you should have some internal targets, like we plan to reduce 25% by 2030 or 30% by this year. So it is about two different sections with two different approaches, where one is dealing with sustainability related disclosures and covers everything related to sustainability. IFRS 2 is only dealing with climate related. Lovely. Here we have some challenges. In challenges, we have transition risk. Transition risk are sometimes, like I have already told you, where there are a lot of standards and legislations coming out each year, and maybe every few months there's something new you have to learn and you have to get yourself educated on. So it is all about policy, legal, market economic risk, and technology and reputation risk. So if you're not working on this side, some companies are falling behind and they are seeing a decline in their business. But the companies who are focusing on that, these are some example in some random way we have put here for just giving some clear view of how these can be achieved and what kind of transition risk can happen. And there is the physical, that is more about acute physical and chronic physical, like some random flood, wildfire, as we know there is a lot of floods and earthquakes happening right now, and we have recently seen that flooding in Dubai, in UAE. So that is one of the reasons. It is now we can see it one of the physical biggest risk that companies should be prepared for. So similarly, is more about the opportunities, like you can improve your resource efficiency, you can improve your energy source, and you can improve your service, your products, and you can improve your reputation. You can build a strong relation with your investors. There are a lot of opportunities when you are working on sustainability. So you have to identify the right one, you have to click on the right one to be in the right direction to make most out of your business. Excuse me. ISSB standards are almost 77 industry-specific guidance standards, and these are like very helpful when you're reporting on IFRS 1 and IFRS 2, and there are some specific disclosures you have to make. You can refer to these standards, and these are very helpful to disclose your information according to your industry type, and you can find the very relevant guidance on these standards. Now you all know about what is IFRS 1, what is IFRS 2, why it is important to comply with these, and how it is above all of existing standards, because it has to be disclosed with your financial disclosure, and every year, as soon as you are disclosing you are submitting your financial documents, you have to submit your information regarding to IFRS 1 and IFRS 2. And we are here, the OASIS Consulting Group is here with all that expertise. And we take you from the initial consultation to your scoping, what is exactly that needs to be covered. Then we do the assessment, what are your readiness level for this level of disclosure, and then we do the training, your workshops, data collection, management, identifying all the processes, risk opportunity, developing strategy, and helping your risk management department to incorporate all of these elements into your existing business model to make you competitive. So it is not about, just give me a moment, please. I'm of the view that it is not always to be scared of something, that is coming and you are like, oh, wow, oh, how we are going to report. There is nothing to be worried about it. If you see this as opportunities, as we are just talking about risk and opportunities, this is one big opportunity. You can, every one of the companies that want to be competitive and have good business, they can catch the opportunity right now at this moment and start disclosing this information and with their financial reporting system, because they have to integrate that with their financial reporting system, and they are already in the first line to get the business, to win the trust, to be like answerable. Every one of the companies, they are answerable to their stakeholders, and regardless of these are internal or external. So there is more about relation building and building that specific trust. And so there, it is not one-time process because you have to disclose it every year. This becomes a very good opportunity right now to tap in. And there we support you with all of that, with development, with implementation, integration, and then ongoing support and everything. So that's all from my side. Apologies for my thought. So I hope you have enjoyed it and you have learned something new. Over to you, Namer.
Thank you, Hira. It was really helpful to learn a lot of new things, especially for the people coming from the accounting background. It is interesting to see how things are getting mixed together, and it will be alongside the financial statements when we are publishing. We need to publish all these matrices and disclosures. So this is really a very helpful session. So now we have some questions coming from our attendees, which we will be raising now to our speakers. So first of all, my first question is from you, Hira. What are potential challenges and opportunities in ESG implementation for the corporates? Because whenever we talk about ESG adoption, and people just see it as another compliance cost, because there are a lot of already compliance finance people are into that. So, but now, so either it's just another compliance cost for the companies, or so I would request you if you can elaborate a little bit on the challenges and what opportunities are there if someone wants to adopt ESG practices in the company from today. Hello, Hira, can you hear me?
Yes, I was about to say, kindly unmute me to answer
Yeah,
this.
please.
Yes, if I talk about if I talk about risk and opportunity and challenges associated with this, there is one very important thing I would like to highlight. I have earlier made comment on this as well. Like the biggest thing I have seen, there is capacity building that needs to be done when that is one of the biggest challenge. People want to know when they have to, what they have supposed to do, when they need to report on, what are the requirements, and how they can integrate those things into their internal system. So they want to improve that internal system. They want to streamline that thing, but they need resources for that. They need capabilities, maybe some specific trainings, workshop, and they need help with development of that internal line that works on providing information, streamlining the whole set of steps for any organization. That is the biggest challenge I have seen that companies face. The second challenge is they need to understand that competitive edge, because there are some initial cost, and sometimes these are very huge to get started. That's how you want to start. If you start early, you can start with minimum. But when you have to start late, you have to give like come up with some big plan. You have to invest a lot in that. But in any case, in both of these scenarios, the payback, the approach, I recommend always when you are investing in sustainable plan and you are implementing something new, you should do your return on investment thing, because yes, it's a bit slow process, but if you do the analysis, okay, we are implementing something very new, and the upfront costs are very high. The best part is, if you want to reduce this, what you can do your ROI. You can ask your team, maybe you can ask your consultant to give that assessment. You can take the services, and they can exactly tell you how beneficial this is for you. Or maybe they will come up with that news that, okay, this is not something very beneficial for you, but there is something else that can help you grow. So these are the challenges, the basic understanding and the fear of investing money. If they adopt these two approaches, which I have mentioned, they will be able to get maximum results out of that. Thank you.
Thank you. My next question is from Bella. Bella, you know that these standards are there in the market since a year, almost a year is passed since these standards are in the market. So we know like all the regulatory bodies across the world are looking at these standards. So what are the challenges so far highlighted by the bodies across the world? So what are the potential challenges which came to the board on the table of ISSB from around the world? So I would request you if you can highlight a few of the challenges people are highlighting in adopting these standards.
Okay, thanks, Numer. It's a very good question. Well, from my experience and observations, the level of understanding and awareness of issues connected to the ISSB standards varies significantly depending on the jurisdictions. Companies in different jurisdictions face different challenges and have different concerns. For example, for the companies in the jurisdictions that haven't started the adoption of ISSB standards journey, they should be more interested in the benefits of applying IFRS S1 and S2 and seek introductory or foundational level of resources. On the contrary, companies in the jurisdictions that have already published sustainability disclosure requirements and which is aligned with ISSB standards are more interested in how to get started and some practical guidance of applying the standards. So, and from a different perspective, if a jurisdiction has mandated the requirements of TCFD recommendations, companies will be more likely to explore transitioning from TCFD to the ISSB. And another case is for European companies. I think they prefer the interoperability guidance of ESRS and ISSB. And if it's a company which has been using GRI standards for many years, they may seek answers on how to interoperate between GRI and the ISSB. So they all have different questions or concerns or challenges. So in general, well, for the certain topics that IFRS S1 and S2 requirements cover, well, I think the main challenges include materiality assessment, scope 3 of GHG emissions disclosure, climate scenario analysis, and the current and the anticipated financial effects. For instance, well, for example, how can a company assess and determine what is the material information for its investors, and how can a company do the materiality assessment meeting the requirements of ISSB standards? You know, the ISSB standards has the financial materiality, but for other standards, well, like ESRS, they have double materiality. So how to meet the requirements of both? That's the challenge for companies. So from the requirements of ISSB standards, actually IFRS S1 and S2 provide some support or mechanism to support the companies to adopt the standards. Well, for example, the ISSB designed what we call is proportionality that is, the requirements are proportionate to the range of capabilities and the preparedness of companies around the world. The standards also allow for temporary or permanent relief from some requirements, depending on a company's circumstances. For example, a company may provide qualitative rather than quantitative information about the anticipated financial effects of sustainability-related risks and opportunity. If the company doesn't have the skills, capabilities, or resources to provide quantitative information. So the key thing is that just getting started, not be afraid of something like the data availability or quality of Scope 3 GHG emissions. We have, if we don't have the real data, we can use some model, the measurement framework that we can estimate the amount of Scope 3 GHG emissions. So just get started. Thanks.
Thank you, Bella. I have another question. Like, it is totally a new subject for the accountants. It's not like other financial reporting standards that we have new standards coming out. But we accountants are well versed into that, and their requirements are usually limited to the accounting side. But here we see it's sometimes these are the areas which are sometimes accountants, and everyone is wondering about from where to start and what is the basic, or is there any tool or anything we can start with. So what are the resources or support available right now at the ISSB platform to start these standards implementing, or what support and learning resources are coming in the near future?
Yes, thanks, Numel. Well, I think the question is also many others have the question mark in their mind. Yes, I will introduce a little bit of resources and the materials the ISSB has provided or is going to provide earlier. So now I think I'm going to provide more details. Well, for a starter or for those who are interested in or want to learn more about ISSB standards, well, the ISSB has already published 5 educational materials besides of the standards themselves. For example, the ISSB has published a comparison of IFRS S2 with the TCFD recommendations, and also interoperability considerations for GHG emissions when applying GRI standards and the ISSB standards. This is beneficial educational materials if you are using GRI standards for many years. And also educational material like nature and the social aspects of climate-related risks and opportunities, which can provide you more guidance or more information to assess and identify related risks and opportunities. So besides the 5 educational materials, the ISSB are also working on the new educational materials covering the topic of current and anticipated financial effects, materiality, interoperability with ESRS, proportionality mechanism, scenario analysis. Well, most of them are the main challenges that I said earlier. That's, for example, the current and anticipated financial effects are the most frequently asked question especially by accountants. Yes, so in terms of this topic, well, IASB republished the educational material of effects of climate-related matters on financial statements. So for accountants, it's a good document for understanding the connection between financial statements and the sustainability disclosures. Yes, and another resource that companies can make best use of is the Knowledge Hub, which I also said earlier. Well, this is a free online resource to help preparers to get ready for applying IFRS S1 and S2. The Knowledge Hub also includes an archive of key resources from consolidated organizations, like IR, SSB, and CDSB. So the resource database in the Knowledge Hub now has almost 160 resources. And you can select what you are interested in by selecting topics, industries, or document type, and so on. Well, another resource, maybe a support tool for the application of IFRS sustainability standards is the finalized IFRS sustainability disclosure taxonomy, the digital reporting package. The ISSB taxonomy provides the common element or text need to make sustainability-related financial disclosures computer readable. So a jurisdiction that adopts our standard can directly use the ISSB taxonomy. And also a jurisdiction can add anything like additional requirements just based on this ISSB taxonomy. So finally, well, I think the way to support implementation or capacity building is to take the FSA credential, a certification exam. The curriculum contains introduction of IFRS Foundation, ISSB, and standards requirements. And the case study is to facilitate the application as well. So for anyone who are interested in this exam, you can find more information on the website. And I hope everyone today can benefit from the knowledge and we shared and the resources we have. Yes, thank you, Numair.
Thank you, Bella. Very, very informative. So we have a FSA certification. This is a good news that everyone can go for that. As per my understanding, there is no prerequisite for this qualification, and it can be achieved. And it will be a very good valuation for the accountants if they want to head into the knowledge they want to build upon the accounting knowledge they already have. So this will give them a flavor of sustainability accounting. Thank you, Bella, for your time, and thank you, Hira. And also, I would like to thank all the participants today. We have a wonderful session with you guys, and we hope you also found this webinar informative and engaging. We encourage you to stay connected with us through our LinkedIn page. And if you have any questions or any queries, you can direct us through our email, info@cloudoasis.net, which is available. This is the same email where you registered for this webinar. Once again, thank you for your participation and engagement. We look forward to seeing you next event. Have a great day.